Morning, Steve Free in Chicago with the morning grain comments. Well, we have a weather market. Yesterday at noon, the ensemble suggested that the ridge that comes into the Midwest next week backs out late next weekend. So we had a big break in prices yesterday. This morning, both the American and the European model agreed with that scenario. So basically what we have is a ridge moves in mid next week. We see some 100-degree temperatures in the plains, 90-degree temperatures in the eastern Midwest, and then that ridge breaks down next weekend. So if I'm a corn plant and a bean plant, this is a pretty good forecast, and it's not as dangerous as what we've seen in the past. We got beans down 16 cents, corn down 6, wheat down 3. For the week, November beans is down 12 cents, but it's 78 cents off from its highs. Corn is down 4 cents, but down 22 cents from the high, and wheat is down 4 cents and 20 cents from the high. Cash markets is reacting to these lower prices by firming up, because we still have to fill the pipeline with especially corn and beans, and our outlook for corn and bean export demand is pretty impressive in that first or the last quarter of 2016 and first quarter of 2017. The export commitments yesterday, we saw beans on close to 52 million tons versus 50.5 last year, but China's lagging a year ago at 28 million tons versus 30. So there is some question mark as to this big open commitment that's not shipped yet. Will that be rolled forward, or will some of that be canceled? In the corn, our commitment is near 48 million tons versus 46 last year, and I think the lack of South American corn to compete with ours is helping that export trade. Wheat's about 9 million tons versus 6 last year. We're seeing a little bit of better wheat trade than expected because of some quality concerns around the world, but it's still not a game changer for wheat. Wheat prices still will probably trend lower because there's too much in the world. Yesterday, funds were big sellers of beans, meal, corn, and wheat. Continue to have a long position, especially in beans, and they probably might whittle that down if we have normal weather for the remainder of July and into early August. So if we have normal weather, July and August, we could see beans fall back to $9, corn $3.20, and wheat $4. So we have to be real cautious of our risk. It is a Friday. The maps could change again before Monday, but right now the maps look for heat next week, and then that heat breakdown by the end of the week. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.